Forex trading is actually one of the hardest things to do, to be very honest. But it can become easy only when we have the right information. So in this video, from my almost 4 years of trading experience, I'm going to teach you this awesome trading strategy that actually changed my trading career. This is UCFX. Welcome back to my channel. This channel is all about helping forex traders get acquainted with the necessary information and knowledge on how to become profitable in the forex market. So if this is you interested in contents like this, do well to subscribe to this channel and turn on the bell notification icon to actually get notified anytime we upload new videos. And don't forget to drop in the comment section any topics that you would like us to make videos on. I'll do my best to do those videos concerning the topics. So without further ado, let's get started. I'm going to make it snappy. Just give me your attention and follow the steps I'm about to show you. So whenever you open your chart, and according to this strategy, the first thing you need to do is start checking or understanding the directional buyers of the market. You need to know if the market is an uptrend, downtrend, or ranging, and you must start from the higher time frame. So I think you should be grabbing your pen and paper. So the first step is the directional buyer. So looking at this pair, this is GBP USD, this is the monthly chart. So if you should first of all try to understand the directional buyers of the market from the monthly time frame, because the monthly time frame or the higher time frames gives us the bigger picture of what the market is actually doing. So this is actually the monthly time frame, and as you can see, we have higher high, higher lows, higher. So practically on the monthly chart, we are bearish. So if we go down to the weekly chart, on the weekly chart, we are still bearish on the weekly chart. So after identifying these directional buyers, understanding that the monthly time frame is a bearish structure, so what we should be looking at in our lower time frames is practically retracement points. So considering the recent price action that just happened here, we had these lows was taken out. So after the lows were taken out, the second step we should be looking at is area of interest, or you can call it point of interest, swing point, or order blocks. If you don't actually know what order blocks are, I suggest you check out this video. The link, I'll be placing the link in the description below. So after this area was taken out, wow. After this area was taken out, let's assume we haven't had this price action, and we only have this area taken out. So what are you going to be looking at? You should be considering this range from this point to this point. Because normally what the market does is, after a point is broken, the market normally will retrace. So you have to find out where this price is going to retrace to, like the place you think it can start reversing from. And these areas are where we call the points of interest, swing points, or order blocks. So if you check, you will see that before this area was taken out, we had our order block in this zone. We have an order block here. We have an order block here. If you don't know what order blocks are, just like I said, you have to check out the video and understand what order blocks are. So we have our order block here. As we have our order block here, remember, whenever you spot your order blocks or your swing points, there must be a break of structure. And definitely we had break of structure. So we had a break of structure here. We had tons of structures broken. We had a break of structure, And this is actually the main lower low that must be taken out for us to actually say that the market will swing up and retrace. So after having all this break of structure and you have identified your order block, the next step is to check for discount levels. Normally, as a businessman or as investors, we try to, or normally as an individual, we always like buying stocks at discount prices. So also in this forex market, the investors, that's the big banks and the big institutions, they buy or sell from discount levels. So I'm going to be teaching you or showing you what these discount levels are. This discount level are practically, if you grab your two from the highs of this swing point to the lows, the discount levels are between 0.78 of the Fibonacci 2 and 0.661 of the Fibonacci 2. So this is actually your discount zone. Your 50%, that's the 0.5, here is what we call the equilibrium. So anything below here is now premium. So the smart money or the big institution, they don't buy or sell from premium prices. They normally like selling or buying from discount prices. So after identifying and knowing that price is now at a discount level, let's assume this price hasn't taken place yet. So as the price is moving up, you should be watching if it's at a discount level. So if it's at a discount level, this is now the point you need to get interested in selling. So after storing and knowing that this price is now at a discount level, what do you need to start doing? This is where the next step starts coming in. You now start looking for lower time frame confirmation. And mind you, before price moves up to this level, there must be a grab of liquidity. What do I mean by a grab of liquidity? If you look closely, you will know that there was kind of like equal highs in this area, which were taken out. So most traders were thinking that maybe it's kind of like a breakout and retest to sell to the downside, not knowing that the price is actually still trying to reach the discount zone. So basically these areas are equilibrium and the premium. So those that were selling or the early sellers were actually taken out. So there must be a grab of liquidity before price gets into any discount level. So after making sure we have all this in place, what should you now start looking out for? So what we are going to be looking out for, or the last step that we have, is lower time frame refinement. So we're going to be using the daily time frame, or basically the H4 time frame and the H1 time frame for our entries to take the sales. Remember, this is the discount zone, so this is the area you need to start getting interested. So let's say you had price enter into the discount level. How would you have entered the trade? How would you have taken the trade? So let's hop on to the H4 time frame actually. So here on the H4 time frame, remember this is the point that we have as our discount level. So after price taps into a discount level, you need to spot out the same thing that you spotted out on the higher time frame. That is, after a tap into a discount level, you need to see a break of structure to indicate that the market is about to go to the downside. You need to spot a break of structure. You need to still look for discount levels on this lower time frame and liquidity and basically even further lower time frame refinement using the H1 time frame. I know you might be, I'm going to explain that. I know what you mean. So here, after price tapped into this discount level, remember this is the discount level that price tapped into. So watch price action. Price came down, went up a little bit, and then start going down again. So basically, if you look closely, you will see that price took out these lows. Price took out this low, And as price took out this low, if you go to the H1 time frame, you see clearer. But because of time, I will have to make it snappy so that you can have enough time to watch the video or practice what you've learned. So after price took out this low, the next step is a discount level. Let's say we don't have this part of action yet. So if you take your fibs from this high to these lows, you will know that we have, you see that price tapped into, our discount level, which is the 0.786 and 0.681 of the Fibonacci 2. So it didn't actually went up that high, but this is actually what we want. So at times it won't come in that deep. So you need to be at alert and wait for price to come to this area. But the main thing you should know is that it must be above the 0.5. That's the equilibrium of the price. So after knowing that price is now at a discount level, this is now where you need to get interested. And mind you, we have a point of interest here, or our order block here. So after spotting out that we have that price is now at a discount level, this is now where you need to start getting interested. So what are you going to do? You will have to hop on to the H1 time frame to refine this trade more. What is actually the purpose of this refinement? This is actually to make you, or to give you the opportunity of having the tightest stop loss. You can have a stop loss of about 20 pips, 10 pips, or even lower. So let's go down to the H1 time frame so that I can show you how you would have taken this trade. So here we are on the H1 time frame, and this is our discount level. And another thing you need to know, before price went into the discount level, just like I said, there must be liquidity. There must be a grab of liquidity. And if you look closely, you will see that liquidity was taken out here. So there was a grab of liquidity. So early sellers were actually taken out. So this is actually why you need to wait for liquidity to be taken out, but liquidity is what actually moves the market. If there is no liquidity, the market won't actually move. So traders must be on the wrong side for trade to actually, let's say this liquidity is actually generating, bringing in sellers. So for there to be a seller, there must be a buyer. So they bring in sellers, they buy up, and was this price now up, buyers will now start coming in, thinking that the market is starting to push up higher, not knowing that this actually when the trend or the major move is about to take place, and then they're all taken out. So back to what we were saying. So this now, the discount level, liquidity has been grabbed. So what do you now need to do after seeing that price has taken out this liquidity? If you look closely, you understand that this actually happened on a Thursday. So another thing you have to put in mind is the trading days that you need to appear on the chart. I will give you this hack. Always come to the charts on Wednesdays and Thursdays. Mondays, Tuesdays are always basically for, resetting the market for the week. So what the market normally do is they reset the market. Market is reset on Monday, Tuesday, then Wednesday, Thursday. That's when you now have the major moves. So you have to appear in the chart on Wednesday or Thursdays. Me, I like Thursdays, and Thursdays is during the London session or London New York session. So after spotting out this area now, as price has tapped into a discount level, what you need to now do is, I think we need to scale down to see what actually happened. So we're going to be using the 15 minutes time frame to refine this the more. So here we are on the 15 minutes time frame, and this is our liquidity. So liquidity has been taken out, and normally the entry technique I like seeing is something like this. Let me show you. I like something like this. I like seeing this kind of price action where price will take out this something, a structure, giving me a break of structure, and then going back to actually tap into this and tap into my discount level, just like I said, tap into my discount level, and then this is where I'll be taking my entry down. But looking at this price action, you will see that here wasn't actually first taken out. So there was price just moved down aggressively. So how would you have taken this trade? How would you have taken this trade? You have to spotting out that you price is already sitting at this discount level. So what you need to do is where you now have to open your eyes and read your candlesticks. So looking at this, you will know that we have an engulfing bar here. So you have a bearish engulfing bar. So this is where you would have taken your entry from. So your entry would have looked something like this. You take your entry after the close of this candle at this point, and your stop loss will be above this area, and you will be targeting the next lows. So let's check the higher time frame and see where you'll be targeting. So you'll be targeting the next lows, and if you check, we have our next lows here. So had it been you placed your entry from this point and you have your take profit at this point, this would have been a 1 to 8 risk to reward ratio. So we are risking only 21 pips and targeting about 171 pips. So this is actually a good strategy, only if you can go back test it and see how it works for you. So this is actually a strategy that works for me. So you have to give it a time and see if you can actually understand more about the strategy. You can check the video or play the video as much as you want to actually understand this. So I would have actually loved to give more examples on how you would have taken more entries using this strategy, but I will be doing that probably in my future videos that I'll be doing. So see you on the next video.